Dear students, in video number 1 connected to final accounts of sole trader, you have learned two objectives of accounting, that is to know the profit earned or loss incurred by a business concern during a given period of time, and the other one is to know the financial position. And for that we prepare final accounts or financial statements. Then you have learned about trading account and profit and loss account, and then balance sheet. And in video number 2 you have learned how to prepare a trading account. Now before going to learn about how to prepare profit and loss account with the help of problems, let us see some of the items which are to be treated in final accounts. Let us take items one by one. Some difficult items or unusual items like goods withdrawn by the proprietor. So there are three types of drawings. One is drawing in cash. Number 2, drawing in goods. Number 3, drawing in assets. Drawing in cash means, so drawings account to cash, that is the entry. Goods withdrawn means drawings account to purchases. And asset withdrawn means drawings account to asset account. So we are bothered about goods withdrawn by the proprietor. So if you draw either cash or goods or assets, that will be debited to drawings account. And when you prepare the balance sheet from the capital account, you deduct drawings account. Then whatever purchases you have made, out of that some goods are withdrawn. That means these goods are not meant for resale. That's why purchase account is credited. Drawings account to purchase account. Treated in the final accounts. For example, first, goods withdrawn by the proprietor for personal use should be deducted from purchases on the debit side of the trading account. That's nothing but drawings. Secondly, as drawings, they should be deducted from proprietor's capital account on the liability side of the balance sheet. Normally, an adjustment should be treated twice, once in the trading and profit and loss account and again in the balance sheet. So first, in the trading and profit and loss account, in the trading account from purchases, you're deducting the goods withdrawn from the business for personal use. Secondly, in the balance sheet, that is deducted from the capital account of the proprietor. That's about treatment of goods withdrawn by the proprietor in final accounts. Second one is goods distributed by a concern as free samples. These goods are distributed as free samples. That means they are not sales. But out of the purchasers, that much of goods go out of the business. Therefore, these goods purchased are not meant for sale. Therefore, that is to be deducted from purchases. So the journal entry, that's a form of advertisement. Giving the goods as free samples, a form of advertisement. That is why it is taken under the heading advertisement, advertising or advertisement. So advertisement account data, it's an expense, debit the expense and losses nominal account. So advertisement account data. 2. See, out of purchases, some goods are not meant for sale. That's why you are deducting therefrom from the purchases. So from the purchases, goods distributed as free sample are deducted. So treatment in the final accounts, already I told you. First, that should be deducted from purchases on the debit side of trading account. And secondly, that is taken as advertisement and debited to profit and loss account. See, normally an adjustment should be treated twice, once in the trading and profit and loss account, again in the balance sheet. An exception to that is the goods distributed as free sample. Both the treatment will be given in the trading and profit and loss account. Normally, once it is to be treated in trading and profit and loss account and again in the balance sheet. But here, both the treatment will be given in the trading and profit and loss account. Alright, next, goods distributed by fire, floods, accidents, etc. I will take one example, fire, and it is applicable to floods, accidents, etc. So there are three possibilities here. One is Goods are destroyed and the loss is not at all recoverable. Nothing is recovered from insurance company. Second possibility is goods are destroyed and full loss is recovered from the insurance company. And third possibility, goods destroyed and partial loss is recovered from the insurance company. The remaining amount is irrecoverable. So these are the three possibilities. Now let us take the first case, if the goods are destroyed and the loss is not recoverable. So in this case, first you have to make an entry, stock or goods destroyed by fire account should be debited and trading account should be credited. So this is the first entry. So trading account is credited by taking this journal entry. Secondly, it's a loss, it's irrecoverable. Nothing is recovered from the insurance company. Therefore, it is debited to profit and loss account. So if you prepare stock or goods account, first it will be debited and next it will be credited. So that account will be closed. Ultimately, loss will be debited to profit and loss account and credit will be given to the trading account. Okay, so first give a credit to trading account, then give a debit to profit and loss account because it is irrecoverable. Nothing is going to be recovered. Entire amount is a loss. Therefore, it is debited to profit and loss account. Second possibility, fully recoverable. So first entry remaining the same. Stock or goods destroyed by fire account data to trading account. And therefore, the amount is credited to trading account. The full amount is recoverable from insurance company. Therefore, insurer's account debtor to stock or goods destroyed by fire account. So you are going to receive the amount from the insurance company, that is admitted by the claim is admitted by the insurance company. Therefore, insurer's account debtor to stock or goods destroyed by fire account. So here there is no loss at all. Therefore, nothing comes to profit and loss account. Whereas the amount to be received from the insurer, that will be an asset on the asset side. It is as good as debtor. The insurer, once the claim is admitted, is as good as a debtor. Therefore, amount is receivable from him. That will come to the asset side of the balance sheet. So first, the value will be credited to trading account. Next, it will be shown under the head insurer's account, amount due by insurer on the asset side of the balance sheet. Third one is partially recovered. First entry remaining the same, the value will be credited to trading account. Then, say partially recoverable. So what is recoverable? That will be debited to insurance account. Then what is irrecoverable? That will be debited to profit and loss account. Then stock destroyed account will be credited. Supposing the value of the goods destroyed is 20,000 and 12,000 is admitted by the insurers, then the net loss is 8,000. So 12,000 should be debited to insurance account, then 8,000 will be debited to profit and loss account, and the stock destroyed by fire account will be credited with 20,000. So what is receivable from the insurer, that will be shown as amount due by insurer on the asset side of the balance sheet. What is irrecoverable, that is a loss, so that is debited to profit and loss account. And stock destroyed by fire, that will be credited to trading account. So that is the treatment of this. I have already told you about all these things. So we will take up the problems and let us see how profit and loss account is prepared. So here both the trading and profit and loss account I have combined. Prepare the trading and profit and loss account of Mr. Ashok for the year ending 31st March 2015 from the following information. So this is a trial balance because both debit balance and credit balance are given in two amount columns and the total tallies. So it is a trial balance and there is an adjustment closing stock. Closing stock is normally comes as an adjustment because at the end of the year stock taking happens and ultimately a value will be determined. That's not a part of ledger account. And trial balance is prepared with the help of ledger accounts. Okay, let us see the treatment. Ashok's capital account, actually this will come to the balance sheet, that's an item of balance sheet. Stock at the beginning and therefore, the accounting year ends on 31st March. That means from 1st April 2014 31st March 2015, financial year, not a calendar year. Calendar year ends on 31st December. Alright, 1st April, so opening stock. So in the trading account, 2 opening stock. Cash will be the part of balance sheet. Debtors will be the part of balance sheet. Purchases will be the part of trading account. If there are returns, that should be deducted. Sales will be credited to trading account. Return outwards, that means purchases returns. Returns outwards means purchases returns. Then you have purchased, then returning, and that will go out. So purchase return outwards. Return inwards means sales returns, that should be deducted from sales. Freight inwards, that is direct expense, will come to the trading account. Freight outwards, that will come to the profit and loss account, because that's on sales. Salaries, rent, these are the item of profit and loss account. They are indirect expenses. Sundry creditors, that is a personal account that will come to the balance sheet. And we are not preparing the balance sheet in this problem. Miscellaneous receipts, that should be credited to profit and loss account. Drawings account will be debited from capital account on the liabilities side of the balance sheet. We are not preparing that. Furniture and fittings, that will be part of balance sheet. Whereas depreciation of furniture and fittings, that will be part of profit and loss account. Closing stock will be credited to trading account. And again, since it's an adjustment, it should be treated twice. That will once again comes on the asset side of the balance sheet. Let us see the trading and profit and loss account. As I already explained, opening stock, then purchases less returns, freight inwards, freight outwards will come to the profit and loss account. Then sales minus sales returns. So closing stock. So credit side is more than debit side. Therefore, balance is transferred to profit and loss account being gross profit. That is the balancing figure. Come to the profit and loss account. So this value is brought down here, 31,500. So by trading account, here what is written is trading account debtor to profit and loss account. Here profit and loss account is credited by trading account. Then miscellaneous receipts are credited. Freight outwards, salaries, rent paid, depreciation on furniture and fittings. These will come to the debit side of profit and loss account. As a result, there is a net profit. The total credits are more than total debits. I mean, total of credit side is more than total of debit side. Therefore, balancing figure is net profit, that is transferred to capital account. So capital account will be opened in the balance sheet liability side. So this is about second problem. By the way, look at the problem. This will come to the balance sheet, capital account, then sundry debtors, cash, then sundry creditors, drawings, furniture and fittings. Okay, yes. Now come to the next problem. From the following particulars, prepare trading and profit and loss account for the year ending December 2019. Here it is the calendar year, not the financial year. Alright, here there is some additional information. There are some additional information. Goods worth rupees 2000 was distributed as free samples. Actually, that is nothing but advertisement, a sort of advertisement. So the journal entry for that, adjusting entries, advertisement account debtor to purchases account. So advertisement account will come to the profit and loss account. If advertisements are there here. So to that you have to add 2000. And from the purchases you have to deduct 2000. It is credited. So purchases are there 3,28,000. You have to deduct 2000 there in the trading account, debit side. Goods of the value of 6,000 were destroyed by fire. So this has to be credited to trading account. The insurance company settled the claim for 4,500. So due by insurers 4,500, that will come to the balance sheet. Whereas there is a net loss 1,500, that should be debited to profit and loss. Actually, there are two entries to be made. One is goods destroyed by fire account debtor to trading account. Next one is Profit insurance account data 4,500. Profit and loss account data with the net loss 1,500 to goods destroyed by fire account. So goods destroyed account will be closed because once it is debited and again it is credited. The net outcome is profit and insurance account data, then profit and loss account data on that much, and therefore yes, amount due by insurance will come to the asset side, and amount which is net loss, that will be debited to profit and loss account. Alright, stock on 31st December, that will be credited to trading account. Again, that will come to the balance sheet. Yes. Let us see the items one by one. Purchases, that is part of debit side of trading account. If there are purchase returns, that is to be deducted. Yes, you have got return outwards, that's nothing but purchase returns. Carriage inwards sales. Sales is to be credited minus return inwards. Return inwards are 7,000, that should be deducted. Return inwards are nothing but sales returns. Return outwards are nothing but purchase returns. Carriage inwards, that is on purchases, so debited to trading account. Carriage outwards, that's on sales, so that is debited to profit and loss account. Stock at the beginning, that's opening stock to trading account. Trading account to opening stock. Salaries to be debited to profit and loss account. Wages, fuel to be debited to trading account. Return inwards, I told you already, that is nothing but sales returns. Return outwards, that's nothing but purchase returns. Discount allowed, normally it is, it's debit rather, loss. So it should be debited to profit and loss account. Discount received is income, therefore that should be credited to profit and loss. Rent paid should be debited to profit and loss. Advertisement should be debited, to that 2,000 should be added. Bad debts should be debited to profit and loss account. Bad debts are nothing but debts irrecoverable, it's a loss. Bad debts recovered. First you treat the debt as bad, but later on you recover some amount from that, therefore that's an income. Depreciation on asset, so that is a loss, so that should be debited to profit and loss account. So all these things I have already explained. Look at the solution. Opening stock 30,000, purchases less returns, return outwards then less free sample distributed, that's taken as advertisement. So totally 3,25,000 net value. To carriage inwards, wages, fuel. Then credit side, sales less returns, goods destroyed by fire, closing stock. So credit side is more than debit side. So the net profit, gross profit is transferred to profit and loss account. So here same amount is written, 2,79,000, same value. Then discount received, bad debts recovered. Debit side, carriage outwards, that's nothing but on sales, salaries, rent paid, discount allowed. When you receive the amount, you allow the discount. When you pay the amount, you will receive the discount. Advertisement, what is given in the trial balance plus given in the adjustment as free samples. Bad debts, which is irrecoverable loss. Depreciation on furniture is a loss. Goods destroyed by fire. Of the 6,000 value destroyed, 4,500 is going to be recovered from the insurance company. So net loss is 1,500. So in this account, when you compare the credits with the debits, total of credits is more than debits, therefore there is net profit, so that is transferred to capital account, which will be shown on the liability side of the balance sheet. So thank you very much.